Hello everyone, we're back again with another video, and as always we're going to educate you and inform you. Now in today's video we're going to talk about the 5 different parties of a life insurance contract. Now the reason why this is so important is that many people buy life insurance and they don't know what they buy. They put down the contract, they put down the paperwork, and they store it away somewhere, but they oftentimes don't know what they buy or understand what they buy. So I want to help change that to have more informed consumers so that you have a great understanding of what you're buying. Not only that, but when you meet with an agent or a broker, you can actually enter the conversation from here so that you can have a very productive conversation and they know that you actually are informed. Some agents or producers don't like that, but I think it's great to have. I like to work with people that are informed, not intimidated by that at all. I think it's better for me if you're informed. It's a more productive and more smoother transaction in my opinion. So let's dive right into it. We're going to talk about those 5 different parties so you understand how they work. All right, so the first thing we want to talk about is the insurer. So the insurer is the insurance company. They're the insurer and their role is to insure you. They're going to make sure that they do their due diligence and they're going to make sure that you are qualified. You do have to qualify for life insurance to get this contract, that you're qualified to do that. And how do they do that? They do that by going through underwriting. They do a process called underwriting where they do their due diligence, and this is a combination of doing the application process as well as after the application process. So when you, as a person that's going to be insured, is filling out the application or going through the application, there's a series of questions that you're going to answer. That's part of the underwriting process. They're going to use that as well as their due diligence and their own research to decide if you are qualified and you're worth the risk. So they're going to do underwriting. The insurer is going to do underwriting to make sure that you qualify, to make you're worth the risk. Insurance contract are unilateral by nature, and what that means is only one party has to follow the policy, have to follow the contract 100%. One party has to make sure that they follow through, and that's the insurer. So insurer have to follow it 100%. Now what do I mean by that? I mean that once the policy is out and the contract is out, then the only thing you have to do is pay the premium. And you will get what they say they're going to give you. When you die, your beneficiary is going to get this amount of money, the death benefit, right? So, but you don't have to follow that. So, for example, let's say you weren't a smoker and you didn't do skydiving because those questions are asked. But years later, you decide to become a smoker and a drinker and you abuse alcohol and drugs and you start skydiving and those things led to your death. They cannot contest that. They still have to pay because at the time of the application, it was true that you didn't do those things, but you don't have to follow those things later. Now, I'm not saying that anybody should go do that, but I'm just trying to explain to you that it's unilateral by nature. So that's why their underwriting is so important to get it right, because they're taking on a risk and they're going to have to follow that. And after 2 years, they can't contest anything. All right, so insurer, that's their duty to make sure that, hey, we're going to insure you, but we want to make sure that this is worth the risk. So they're going to do their due diligence through the underwriting process to make sure, because they have to follow it, because it's a unilateral policy and they have to follow the guidelines and follow what it says it's going to do, regardless if you do that or not. Okay, all right, next is the insured. The insured is the person that the insurance policy is going to be on. So like for example, when you're driving in your auto insurance, you're the insured, you're the driver. The person that's going to drive the car is the insured. In life insurance, the person that the life insurance is going to be on is the insured. So that's the person that's going to have to answer all the health questions and all the lifestyle questions. Do you skydiving? Do you drive? Do you fly planes? Do you do all that kind of stuff? Do you ride motorcycle? All those activities that could be considered risky, and your lifestyle and your health, you're going to answer all that questions. So you have to be in good health to qualify, right? Not perfect health, but good health. So insured, that's that person. The next party is the policy owner. Now sometimes that's the insured, but not always. Most people think that has to be the way, that whoever is insured has to be the policy owner. Not at all. So if I want to open up a policy and I'm not very healthy, but my wife is healthy, I can put insurance on my wife, but I'm the policy owner. I own the policy, have the rights of policy owners. I can change my beneficiary. I can, do whatever I want, as a policy owner. I have all policy owner right, even though I'm not healthy, but the insured, my wife, is healthy. Now, you can't just put insurance on anybody like that without their knowledge. So they would have to be present. At least I know that's the law in New Jersey, and I would assume that's the same in every other state. But you do have to make them aware that you're going to put insurance on their life. All right. So the policy owner have that right to change beneficiary. A policy owner have that right to borrow against the policy. All those rights come from the policy owner. All right. The next person is the payer. The payer is simple, the person that's going to pay. Okay, that could be the policy owner, that could be the insured, that could be someone else. For example, your business could be the payer and you could be the policy owner. Or your business could be both the payer and the policy owner. You know what I'm saying? Or the insured could be the payer but not the policy owner. So they don't have to be the same person, but in a lot of cases they are the same person, but not always, right? So the payer is the person that's going to pay the policy. So when taking the application, you have to say who these people are. Who is the insured, who the policy owner is, and who the payer of the policy is. That's going to pay the premium. Next is the beneficiary. And I'm sure you guessed that one. Of course, that's the person that's going to get the benefit. All right, so that's the person that's going to get the death benefit. So when the insured died, the money is going to go to the beneficiary tax-free. Now, the beneficiary could be a person, or it could be a trust, it could be a charity, it could be whatever. Whoever the insured, or whoever the policy owner wants the beneficiary to be, they could be the beneficiary. All right, so that's who the money is going to go to, tax-free, without going through probate court. So that's what the beneficiary is. So just to recap again, the insurer is the insurance company, the company that's going to put the insurance on the person's life. The insured is the person that the insurance is going to be on. That's the person that has to be in good health. The policy owner is the one that owns the policy, have the rights to the policy, could borrow against the policy, could change beneficiary. They own it. It's their policy. And the payer is the person that's going to pay the premium, that's going to pay the monthly premium. And the beneficiary is who's going to benefit. That could be a person, that could be a entity, that could be a charity, organization, a trust, whatever. But the insured has to be a person in this case, all right? So the insured has to be a person. I hope that information was valuable. If you have any questions, feel free to leave it in the comments or send me a DM or anything like that. But before I go, I do have a favor to ask. If you could just like this video if you found it valuable and share it with someone that could use the information. As I mentioned, my job, my duty, my passion is to make sure that consumers are informed. An informed and educated consumer is the best consumer, in my opinion. And you can prevent yourself from not being taken care of the right way or not having the right thing done for you by being informed, simply being informed. So share it with someone else if they could benefit from it. And if you haven't already done so, make sure you subscribe to the channel and hit the notification bell so whenever I make a video, you're notified. Until next time, I'll see you soon.